Hello traders, you are welcome back to the Forex Geek channel. In this video, we are just going to be diving into scalping GBPUSD. The GBPUSD scalping strategy is perfect for traders who want to make quick, small profits by capitalizing on short-term price movements. Scalping can be an incredibly rewarding strategy if you know when and where to enter the market. So in this video, we're just going to be breaking down everything you need to know to start scalping effectively and profitably. All right, let's just quickly get started. Now, scalping is a popular trading strategy where you make a lot of small trades over a short period of time, aiming for tiny price movements. Unlike swing traders who hold positions for days or weeks, scalpers look for quick in and out trades, often lasting only minutes. Right? So for the GBPUSD pair, scalping works particularly well because it is highly liquid and volatile. This means you can often find quick price movements that can be capitalized on, especially during peak trading hours when the market is most active. All right. But how do you identify those prime scalping opportunities? Let us just quickly dive into the next section to find out. Now, when scalping, the key to success is spotting the right entry point at the right time. You need to be able to spot price action that suggests a potential short-term move. Now, here are some tips for identifying the best entries. First of all, you should look for consolidation periods. Of course, you're going to find consolidation periods. Consolidation is one of the things that happens at intervals. Yeah, you can see there's actually some consolidation happen. There's actually some consolidation happening around here. Right, you can see it's a consolidation phase that we have going on around here. The price will often consolidate within a narrow range before making a big move. Guess what? This is what happened after a consolidation phase. If we're going to narrow this down, we can see that we even had a narrower consolidation around here before a breakout happened. Okay, this was also a narrower consolidation, but then if we are going to combine the both of them, this was more like a wider consolidation phase. A consolidation here, another consolidation here before a notable breakout took place that sent the price all the way up to this place. Okay, so these consolidation zones are perfect for scalping because the breakout from these zones can be sharp and quick. Now, watch for price action, candlestick patterns that signal a reversal or continuation of the trend. For example, a doji candle at a resistance might indicate a potential reversal. Okay, you should be watching out for such indications. Yeah, you should be watching out for such indications. Let's see. Okay, we have something like that around here. You can see that we had a doji around here, right? This is a doji candlestick pattern. This can indicate potential reversal. You can see after price came down to this point, you can see that we had a doji form, and after that doji, you can see that there was, doji represents a state of indecision, right? So after the formation of this doji, we can see that we had a reversal to the upside. Okay, so this is one of the candlestick patterns that you should be watching out for when you are anticipating a reversal within a consolidation phase. And then watch out for volume spikes. All right, you can also look out for any other candlestick patterns, whether it's a bearish candlestick pattern from around the resistance or a bullish candlestick pattern around the support. Okay, yeah, and then of course watch out for volume spikes. You can actually add a volume indicator to the chart, just to ensure that whenever perhaps a reversal is about to happen within that consolidation zone, there is an increase in volume. You can see here there was an increase in sell volume validating this particular sell move. There was an increase in buy volume validating this particular buy move. All right, now that you know how to spot entry points, it's important to understand which time frames work best for scalping. Now, for GBPUSD, the most effective time frames are usually the 1 minute, the 5 minute, and the 15 minutes. Okay, the 1 minute chart, 5 minute chart, and 15 minute chart. These shorter time frames allow you to catch the small price moves that make scalping possible. However, do not forget about market volatility. Okay, scalping works best during high volatility, so aim to trade during peak market hours. like the London and New York sessions, okay, when GBPUSD tends to be most active. Now, to make sure that you are trading with precision, it's important to use the right indicators. Here are a few that can really help you confirm your scalping entries. The first is the moving average indicator. The moving average indicator, we're going to be using the 20 period and the 50 period EMAs. All right. We're going to be using the 20 period and the 50 period EMAs. All right. So these moving averages can help you identify the overall market trend. For scalping, you can use moving averages to confirm whether the price is trending or ranging. Okay, and whether it's a good time to enter. When price is ranging, you're going to notice that the moving averages are just going to be intertwining each other, moving sideways. But when you have a trending market, you're going to notice that price is going to be bouncing off the moving averages in one particular direction. For example, you can see that price is bouncing off the moving average going upwards, right? Bouncing off the moving average going upwards. Okay, that indicates a bullish trend. But in the case where we have a bearish trend, you're going to notice price bouncing off the moving average going downwards. That's what we call a bearish trend. All right. Now, concerning the Bollinger Bands, that is the next indicator we're going to be looking at. All right. The Bollinger Bands. Bollinger Bands are actually great for scalping. Yeah. Let's just increase the thickness of this. All right. So Bollinger Bands are great for scalping. I'm just going to hide this real quick. Yeah. Okay. They're great for scalping because they help you identify periods of high and low volatility. Okay, when the price breaks outside the Bollinger Bands, for example, you can see what happened here. When price breaks outside the Bollinger Bands, it can signal a breakout or a continuation. For example, this scenario, it was a breakout because we were having an uptrend before, right? You can see we're having an uptrend, but then suddenly you can see how price just broke below the lower band with this strong sell candle. And guess what? Volume backed it up. That is the reason why you should pay attention to volumes. Volume actually backed it up. You can see this sell backed by volume. All right. So as a result of that, this would have been a good opportunity to enter a sell. If you had entered a sell trade around here, set your stop loss above the breakout point, and your take profit can actually be around support zones. And you can see we have a good risk to reward ratio because it's very important to have a good risk to reward ratio. So when the price breaks outside the Bollinger Bands, it can signal a breakout or continuation. In this case, as I said, it's a breakout. And that is exactly what you're looking for when scalping. And just jump in quickly after you get your confirmations. Now, scalping can be a highly profitable strategy, but it's also essential to use proper risk management to protect your capital. Here are some risk management tips for scalpers. Yeah. First of all, you should risk 1% or less per trade. Due to the fast-paced nature of scalping, you want to keep your risk low on each trade. A good rule of thumb is to risk no more than 1% of your total trading capital on a single trade. All right. And then make sure that you use tight stop losses. Scalpers use tight stop loss orders to protect their trades. Since the trades are quick, you want to keep your risk tight and exit the market if the price moves against you. Okay. And then you should use a fixed target. All right. You have a set target for each trade. Scalpers typically target 5 to 10 pips per trade. Right? But the goal is always to stick to a set target and not chase bigger moves. Okay, so that wraps up our breakdown of the GBPUSD scalping strategy. By identifying the best entry points, using the right indicators, and employing strong risk management, you can start scalping effectively and consistently. If you found this video helpful, be sure to like it and subscribe for more trading strategies and tips. Leave a comment below if you have any questions or you want to see more content on scalping or other strategies. Thank you for watching and happy trading.